Hi, I'm Alexandra Woodyer Sherron. I'm the president and CEO of Empress Royalty. We're a royalty and streaming creation company focused exclusively on gold and silver, and we invest in revenue-generating assets or near-term revenue-generating assets.
Oh, it's good to see you.
Great to see you too.
Now, you've been on the road a while.
Yeah,
this is exhausting, right?
It is. It's a lot of hard work, but we've been having some amazing meetings.
Right, now then talk, and let's explain this because you've got to get out and find the business. It doesn't come sort of necessarily always running to you. We were in Beaver Creek last week, which was tough at altitude, and we're here at the Precious Metal Summit down in Colorado Springs. So, how do you tackle these things?
Yeah, so these conferences are very important to us in the sense that I'm out there, we're talking with shareholders, potential new investors, but the bulk of our energy is really focused on the business development side. So that is meeting with companies. Some are new. We've met some interesting stories, but also developing the relationships, the ones that we potentially want to invest in. And when we're investing money in our company, as other people invest, you really want to get to know the management team. You want to read their body language. You want to do eye-to-eye contact. We're able to dig in a lot deeper when we have them. So.
Right. But you're not rocking up with no knowledge. There's a lot of desk research before you get here, right?
Exactly. And every company's, a lot of research goes into it. A lot of pre-conversations have happened. So they're really stories we've targeted that we really want to sort of advance those discussions with. Or in some cases, we've gotten to know them, and it's not going to be for us.
Okay. The types of companies, obviously last week different from this week. Last week, a lot smaller. A lot of people desperate for money still because the money's not come cascading down through the producers yet. So still a good market for you guys?
Absolutely. There's so many opportunities for restarts, expansion capital, really seeing a lot of those. And some bigger companies that just don't want to do dilution right now because they really aren't getting reflected with the share price. So there's opportunities for us to get involved with those. So there is a lot of different ways that we're looking at deploying the next round of capital for us into the market. And that's a combination of timing, what makes sense for us, how fast we can go through due diligence or not, as well as what fits into the portfolio, and that matrix. We're always looking for that balanced portfolio.
Right. Now, a lot of companies there last week. I think over 200 companies there last week. A lot of companies to get through. Not a lot of time to do it. I noticed you had a few people with you last week. Yeah. Did you manage to see everyone between you that you needed to?
We did. We really divide and conquered.
Right.
It was fantastic. I had investor relations, I said meetings with the shareholders, both the business development side. We absolutely did. And when we get onto that platform to register our meetings, we're cruising through those 300 companies. Yeah. We're digging into all of them. A lot of the stories is we've known for a long time, but have they advanced to the next level yet where it might be attractive for us to get involved and do something with them?
Right, so the ones you knew, any pleasant surprises?
Yeah, there was actually one really pleasant surprise.
Okay.
Yeah, so that
you
we'll see.
Names.
No, won't know names. No, until
right.
we've rejected quite a few deals over the last while. Unless the deal makes sense, we're not going to do it. But you do your desktop review. We have an amazing technical consultant with David Lang. We do the desktop review. If we can agree on terms, then we go into the third-party due diligence, and sometimes it doesn't work out there. We're all big shareholders in the company, so we want to make sure that these deals make sense and will really be accretive to their shareholders.
Right. Now, I find with these conferences, so I'm doing the same process as you from a different perspective. I find bumping into stories I was not aware of happens a lot. And that could be on the patio, in the corridors, or otherwise.
Or someone else introduced you to someone in a conversation. Yeah. You hear the story, and then you go home at night and research them and look at them, and then there's potentially something that could be done. So a couple of those happened as well.
Right.
They're earlier conversations, and we'll be following up those a couple months. But when we're here, we're seeing so many at once, so it is a really good filter process.
Right. Now, obviously, like I say, the profile of those sorts of companies last week very different from this.
Yeah.
What are you hoping to get out of this?
For here, a lot of it's more business development stuff for us. Right. So there are companies we had, we've had some initial conversations. Now we're actually further way offsite, having proper really digging into the conversations.
Okay.
So we're talking about terms and stuff like that. So there are different companies. Obviously here there's a lot more producers, a lot bigger market cap companies. But as I was mentioning, some of these groups are potentially going to do a huge expansion or a massive restart. Now they're thinking of a smaller one. Start getting some cash flow coming in, and then they'll do the bigger one later on. So there's, they're quite different conferences.
The other thing is, we've been researching you too. The other thing we noticed was that we saw you on stage last week and this week. You're starting to, which wasn't happening before. You're the new kids on the block, as it were. Yeah. You're starting to get mentioned in the same breath as some of the other, kind of mid-sized royalty companies, streaming companies.
Yeah.
How does that work for you? What's the advantage of that for you?
We are a 30 mil or 35 million US
Yeah.
market cap company. I'm on the stage later on today with companies that are, 150 up to $300 million market cap companies. But when you look at our revenue, what they're forecasting, what we're forecasting, we're starting to get that revenue of that level. And I think that's perhaps how we're getting some more recognition for the revenue starting to come in.
Right.
Our revenue last year was $3 million. We're expecting $6 million in US this year. And after that, it should be $12 million. And that's if we did nothing else. That's just with our 4 revenue producing assets now.
Okay, well, time to talk about them, right? I met one of them, and the new guy, Dan, at Luca. He impressed me, actually. And I know he hasn't been there a while, and he's just getting his feet under the desk and trying to work out how to play it. But tell us about Luca, what's going on there?
Yeah, so that was when we invested about 2.5 years ago. It's taken in the Talavera project, and we're taking 100% of their silver, which is about 10% of their production, for certain ounces when it steps down. We've been patiently working with them through their growing pains and through them getting into construction. So there's been a lot of changes in management there. I think Dan's really stabilizing that. And they just
Some negotiations as well?
Yeah, absolutely.
Right.
We've been patient, but I think that's paid off now.
Right.
With Dan coming in, with them raising the additional $10 million for the drilling they're going to be doing in Talawedo, for some of the rework they're going to be doing at Campo it's becoming a very, very interesting story. And I think the right person is now really in place to run that company to the next level.
So, and that's kind of struck me, that kind of renegotiation, midway through, because it's got to work for both sides. You can't strangle them so they can't do what they need
100%.
to do, and yet you, at the same time, you don't want them to be relaxed about it either, right? So, who brings up that conversation?
It's a mutual conversation.
Right.
We because the way we structure our portfolio and the way we do the investments, we're directly investing into the company. I'm not buying third-party royalties. So we do have that direct relationship. We've got monthly reporting. If something's going amiss, we get weekly flash reports. So we're very hands-on with them. So we are aware when they're running into struggles. We want to understand how they plan on solving that and then work with them. We need them to be successful for us to be successful.
Right.
And we want to work with them. There's no point in, they've got to work. We want to help them work.
Okay, and should we go to Africa next?
Yeah, absolutely.
What's happening?
Yeah, so we've had that lovely project we have in Mozambique. We've been receiving consistent revenue now for over 2 years. That was a development asset, obviously gone into production. They've been fantastic operators. They're doing some more exploration work on the project, which will give us even a longer one, because that's a royalty. It's a 1% across everything. So they're doing some of that work now. We'll see what that looks like in the coming months, what more life will come out of that even further. And then we did the Galaxy one, which I think I've talked to you briefly about in South Africa. So they're still ramping up. Final bits of equipment are kind of coming online now. And that was one where we invested $5 million. They've got a great plan.
It was last year, only.
It was just actually in February when we closed that, end of February.
Right.
Yeah. So that one, they just got the money and have been deploying it with Golconda at the Galaxy mine. So we're excited with that ramping up too.
Okay. Again, then Peru is where we...
Peru is great, yeah. That was a producing asset we've invested in. They've ramped up. They're on the other side. We get gold credits every week from those guys. Lovely little operation. I was just there a couple
So if I look at those 4, right, they're of a certain size at a certain time. You were just starting out. You need to get going. They're good, small, perfectly formed, but they're not probably where you want to be going. And you're going to follow that, I presume, natural progression that royalty and streaming companies do, where they kind of get access to more capital because they're seeing the revenues coming in. You know how to do deals, and you look for slightly bigger projects each time, or opportunities each time. So, you described the conversations of last week and what you want to do this week. So talk about the profile of the sort of next type of deal that you want to do.
Yeah, we launched the company, took it public in December 2020, and we had a concept that there was the opportunity to provide streaming finance to the smaller side of the market. And we layered in some development to our non-production and some producing assets. So we've kind of got proof of concept now. And now with our financials coming out, that revenue coming will be, demonstrated that we've delivered. So as we move up, when we set it up, it was sort of mandated under $25 million, and that was a space we want to operate. We've done, $3 million, $2 $5 million, and a $10 million investment. Now we want to kind of move up a bit. So, we've got, with our new VP corporate development coming on, Nora, we've been looking at a lot of opportunities instead of 10 to 15, maybe a little bit bigger if it's the right strategic opportunity. We've got the money from Nabari to fund those. So it really was, it's proof of concepts happening, and now we want to raise it up and get some more slightly larger deals coming into the portfolio. With more revenue.
And let's talk about the kind of macro side of things. Lots of M&A happening. I think retail expect that money to come cascading down and being redeployed into the junior side of things. That's not really the case and work within that sort of quick time frame. is it a good environment for companies like yourself? I mean, because there are moments where you can make hay, right? So do you think your products will have to change? Do you think the terms will have to change for companies like yourselves in a market like this?
In the market right now, I think where we're at is there's so much opportunity. It's how many can we get done and which are the right ones.
Right.
Again, we won't do a bad deal, so I'm not going to win. That's the intention. So for us, it really is that. If the market does turn and the equity market comes back, there's a lot of other opportunities we've been advancing that might make sense as well. So it really is, we're aware that the market's not always perfect, so we adjust accordingly, and we've demonstrated that.
Right, and of course your Africa experience is there, and your contacts are there, but the jurisdictional risk, always, everyone's talking about it now because there are things blowing up, even in the safe jurisdictions now. So how do you come at the kind of risk analysis?
Yeah, I mean, we are, due to our background and our experience, Endeavour Financial being a large partner of ours, I'm ex-Endeavour Financial. We're very comfortable operating in Africa. We know how to structure deals in those jurisdictions, how to get the appropriate security over the assets, register everything. So we're comfortable in a lot of jurisdictions, very comfortable in South America. We're looking at some things in Asia. We might even look in North America if the deal was right. So yeah, we're very open geographically. And I think that really is leveraging off our experience. And there's a risk reward too, and so it's always balancing that out.
Right. Okay. And do you think your current shareholders understand the process you're following? Do they appreciate the kind of the effort to actually get revenue this early on?
I don't know. I mean, we're just going to keep our heads down and doing it. But the process of going through it it's we're not putting up presses every month because we're not doing deals every month because we're not acquiring them. When you're actually directly investing in a company, there's extensive due diligence. We review everything on the technical side, the tax side, the legal side, financial side, and really do our homework. So yeah, we're not just buying something and the documents being assigned to us and we can push the other one out. So yeah, it's a lot of hard work.
Well, they've got not busy being busy.
Yes, yeah.
It's busy being effective.
Yeah, I mean, also most of our team has a structured finance background, so we've been doing this for most of our careers, and we love structured finance. We love the different elements we can tinker with and play with a streaming agreement to make sure it works for us, but also understanding the company we're investing in, where they want to go, what they want to do, what phase they're at. Yeah. So it's an exciting business. I love the structured finance side of it.
Yeah, for sure, exciting. My background too. I think in terms of the commodity, precious metals, you're going to stick with that.
Absolutely. Right now, we're pretty much the only pure gold and silver royalty company. Yeah. And we plan on staying that way. Okay. I think that's, stay with what we know. We don't want the diversification in there. And I think really with where we believe commodity prices are going, we really should see that lift in the share price.
Good to see you.
Great to see you too. Thank you, Matt.